Hey everybody, Jared Jones. For the 8th straight month, home builders are petrified at the future of the housing market. Okay, now you have a professional in the marketplace when you look at what the home builders have to say, when you consider their words. This is the NAHB report. They survey the builders on a month in, month out basis. June remarks the lowest this year in a constant steep decline, one of the lowest we've seen in years. I mean, absolutely on the floor on how builders are looking at the future. And this is going to be detrimental because home builders are the leading edge. They're the ones that are starting housing. They're the ones that have sites all over the US, and their foot traffic is where economists look when they start to see cracks in housing. And it's being epically reported that foot traffic is plummeting, that homeowners are now homeowners or builders rather are slashing prices to make sure they're not stuck in those properties. And this is a very, very bad sign because we've been seeing them constantly push their inventory levels. Every stage of build is going up. There's more homes in supply for builders right now than any stage before. And the problem is, a lot of folks look at that, the naysayers who do not believe there's danger, look at it and say, well, now we're getting a healthy supply. Well, you're almost now pushing 10 months and the builders are now slashing prices month after month. So, you have 2 months back, the builders were 13% across their inventory. They cut prices to sell homes. That number increased by 35% again last month. They're almost 20%. 1 in 5 homes now for builders are now having reductions to get out of those properties. Now, you back that with also things like the fact that there's huge issues in the economy in the US, okay? Just like everybody looking at housing with a high normalcy bias, they're saying, well, you know what? We're not 2008. We don't have these mortgage issues. Well, 2008 wasn't just mortgage issues. I know many, many, many people who didn't do 100% financing and lost a lot of homes. I know many people who put 5, 10, 15, 20% down, lost homes. That made that kind of perpetuated this supply of distressed inventory. Now, the backdrop of 2008 wasn't that people just bought too many homes. Now, by the way, we have that problem now. Many, many people in the last 2.5 years bought homes they don't live in full time, that aren't paying rent. But you also have the economic backdrop. And I'm telling you, if you aren't paying attention to what's going on in the economy side, you are going to be blindsided by what's coming up in 2023 with the housing market. I'm gonna tell you why. Consumer sentiment has plunged to the lowest level that they've been tracking on record since the 1950s, okay? Now, why? There's a lot of issues. I mean, we wanna act like it's just fuel prices, but the cost of things has risen, okay? That means you're seeing that there's a lot of heads up coming for the winter, that it's going to be extraordinarily expensive for people to heat their homes. You've got the food crisis, that just paying for food is now more expensive. And you've got the backdrop of all these food factories that mysteriously, and food processing plants that mysteriously came offline due to fires and flooding and it's weird, folks. I'm not trying to be tinfoil hat here, but look at how many factories went down between like March and June of this year. You couple that with now a severe drought that's hammering food supply and harvest production from all over the US and Europe. You already have food supply constraints because many of the highest producers of wheat and things of specific products, countries overseas, are now, for political reasons, not trading all over the place, limiting how much they're gonna allow out of their country. So you backdrop that with the fact that we're talking about housing. And what's gonna happen with housing? Well, what's happening with housing is that the housing affordability numbers, okay? This is where everybody gets confused, is everybody says, oh, housing can't fall. It's gonna be so stable in my area. Baloney. Housing affordability is in massive trouble because while everybody else's available supply of discretionary money, yes, we want to say that housing is a pivotal part of your existence and everybody has to live somewhere. That's the basis of that starting argument. But the fact remains that housing affordability is now measuring at the lowest level since 1989, okay? Now, that is really what has become a major factor in breaking the marketplace right now, because the trumpets have been blowing for the past 2 years. You know, realtor board economists, I think Lawrence Yun and some of these other guys have come out and said we are at a, I think it was like 5 million home supply shortage. It means we build 5 million homes, we'll just start to get on track. Well, if we are such in a supply shortage, then is it the interest rate alone? I mean, it's like 5% range. It's surely been higher in the past. You know, is it the fact that people just don't have a lot of cash because everything else got so expensive? And ultimately that becomes the reality, isn't it? Isn't it that interest rates are so historically high that's pinched everybody from being able to buy a home? No, that's not the case. Home prices went up almost 50% in the last 2.5 years. Definitely an impact, but is it exclusively just a factor of price? Well, how about the fact that everybody's money goes to pay for everything else that costs way more than it used to? Which brings us back to the Fed, okay? The Fed is who we all put an inordinate amount of trust into. You know, it's like, oh, they're going to bring this into a soft landing, folks. Listen, they're just getting started. The Fed is just getting involved into creating the correction for this housing situation. I mean, you've got the Fed now dialing up interest rates, and the predictions are that it's just getting underway and it's going to need to be more. It's going to need to be every prediction's, 0.75 or 1% in the next raise, and it's going to be continually kind of following that pattern. So if that is the case, what's going to happen to the economy? Okay, because everybody that wants to float that the housing market's okay, it's not going to change very much, they're floating on the idea that the employment is going to stay stable. Okay, that's, you're not working in reality. Okay, if you're already in this economy, the employment rates aren't going to stay stable. Okay, because you already have major employers cutting back. If you watch the news, I just saw an article yesterday come out about how an executive at Google came out and told his company, hey, look, if you don't put up numbers, if you don't produce, you are going to be gone. And I quote, this is what he said, there will be blood on the streets. Okay. Now I think the actual phrase is blood in the streets, but to be accurate to what he said is that there will be blood on the streets in relation to how many tech people are going to be out of a job. Now, tech people make good money. Tech people bought homes in Florida, in Miami. They bought homes in Boise. They bought homes in San Diego. They bought homes wherever they wanted to because they could live wherever they wanted to. And the advent of the remote worker pushed them all over the country, okay? This is what blew up the Florida housing market. The floating housing market, in some of these marketplaces, we can still see have even price growth to this day. But I got to tell you, you've got all of these companies, Amazon. I mean, I could list 15 companies that have come out in the past 2 or 3 months that said, you know what? Plan for cutbacks, plan for layoffs, plan for changes. Many of the people that are much more liberal type organizations, I'm surprised at the tone. And I don't want to get all political on this, but I'm just surprised at some of these like Zuckerberg types that came out and said, some of you don't belong here. Basically like, just get the message. If you're not productive and awesome, you're gone. Which is funny because these folks that kind of portray that they're not very, and I don't want to say capitalistic because I don't think being nasty with your workers is capitalistic. I don't think fear and nastiness, I'm a capitalist at heart, but I don't think that is the way to go business. I think you need to say, here's the production we need. And, if it's reasonable, stay. If it's not, do what you need to do. I think things could have been kinder in some of these situations because you are seeing it. You are seeing layoff reporting starting to take place. As the Fed pushes harder, you got to understand the economy of what is happening. Like if the Fed pushes even harder with interest rates, you're going to have fewer projects. You're going to have contraction, which is the goal. It has to happen. People can't afford things. So the size of the economy has to shape up in a different fashion. And honestly, I mean, I don't know how you avoid a serious recession when you had such a high increase in the marketplace. It has to be drawn down, folks. And I got to be honest, okay? Right now in the housing market, the only thing keeping our prices from falling even harder than they are, and right now there's a record number of price reductions. The median home price of new listings is dropping and everywhere, nationwide. The only thing keeping the market from softening really, really fast right now is that sellers are so aware that things stink. They're just holding back. They're just not putting the homes in the market. So active new listings are starting to slow way down, and the listings that are there aren't selling, okay? The amount of homes that don't sell in under 2 weeks is going up and up and up. It's like multi-year high. And then the amount of price reductions is a multi-year high, meaning sellers aren't selling very quickly. There's history of this idea of multiple offers is gone, okay? So with all that being said, what do we have to look forward to, okay? Now, the bottom line is that every market correction, it has, the recession is a game changer. Please, folks, if you're sitting there thinking, well, this isn't 2008, my home's not, I don't see this in my market, blah, blah, blah. You're looking at now. You're not looking at, a big percentage of your workforce now all of a sudden softening and having to look at their home as cracking it like a piggy bank to make ends meet, okay? Now, the obvious knee-jerk reaction to people is they say, well, then they have to rent. Well, they'll have to rent if they sell their home. That's not a smart move because maybe they got this 3% interest rate back 2.5 years ago, and now they, they're going to be just basically staying put because that's such a better price. Well, you got to understand what goes on in the mind of a person who's desperate. And I don't mean desperate, but I mean, you're in an economy where there's going to be a very serious shift in supply of labor, right? It's going to go from no workers competing for a job, people getting paid top dollar, to a bigger pool of people looking for the same job and wages dropping, right? That's what has to happen. You're going to reverse the economy. So that's another thing is you don't think wages are going to fall back. With the worker pool reversing with all these labor changes, you're not going to have the same outlook on labor that you do right now. You're going to have more people looking for the same job, which creates what? Competition, which rolls back wages. Because that's what we're not experiencing that now, but that's going to shift. Okay? I mean, think of it logically. So if you're in a position where you're struggling, you have to now look at, well, my house is losing value by the day. I see that. I'm struggling to feed my family. If I cash out, I can use some of this money for rent and some other things that I need to do, start a small business on the side. You're going to see a lot of that. And in a market where there's absolutely low demand is only going to get caught up if house prices fall enough. So that's what I see happening. Interest rates, the Fed is tinkering. I think the Fed's messing with interest rates in the background. I think when they get a little nervous, they pull back a little bit. And you say, well, how? The Feds can't affect mortgage rates directly, but they have, okay? They did over the past 2.5 years. They were buying $40 billion in mortgage bonds. They were MBS securities. They were purchasing them out of the market at $40 billion a month, which kept the market tight and interest rates low, okay? Now, they've said they're reversing those back into the market. I think that's ultimately what sunk the rates early this year, is they started to reverse the MBS buying and pushing out some of the securities that they've had, okay? Now, I don't know if you can get rid of the amount of securities that they've had to the rate that they want to reverse that. But you think of it, you were pulling them in to float the market, and then you started to let them out, which lifted the market, created higher interest rates. So I get the sense that, we just had interest rates come down for a week. They went under 5% in the 30-year. It went to like 4.99 for like a few days. And it seemed like the housing activity picked up on the national scale. And I'm talking about what I'm seeing anecdotally, but it's just interesting. It makes me wonder if the Fed is doing some moment-to-moment manipulation with their MBS, the securities that they're releasing back. So that's it. By the way, I'm a Florida boy and I'm in the mountains right now. If any of you would like a shot at a $100 gift card to the restaurant of your choice, guess where I am? Because where I'm at is not flat. I'm in a beautiful home. If you'd like to stay here, I'll give you the link. Just comment. It is amazing and I'm enjoying it. But with the articles I'm seeing, I want to push that out there. By the way, we are still doing some very, very high return, recession resilient home ownership investment. So basically we're doing buy and hold. Check it out, nestshare.com. You can invest with me there. Doing some really great things with single family, high demand, really good rent return. And I believe a marketplace that's going to do very well, even if the market takes some rough seas. It's going to be one the market needs in hard times. With all that being said, thanks for watching. Subscribe to the channel if you haven't. I'm constantly dropping updates of what's going on, how we're seeing it, news and commentary. Let's get into a fight in the comments. If you got you want to take me to task on a few things, I'd love to hear from you down below and I will respond. Thanks for watching. Appreciate all the support. We'll talk to you real soon. By the way, if you want to reach out to me with news, content that you're seeing, reach out at info@jaredjones.com. We'll talk to you real soon.